The stock market bull run is not over. Today, we analyze the S&P 500. However, we actually take a look at a higher time frame in order to be able to determine exactly where the S&P 500 will head next in the near future. Therefore, looking here at the monthly chart of the S&P 500, before we start with our technical analysis, we first always have to determine the underlying trend. On the S&P 500, you can see that starting back in the year 2000, we saw the creation of a substantial horizontal resistance. Back then, at this psychological $1,500 level. Also, approximately 2 decades ago, we saw the creation of a substantial horizontal support, which back then was also at a psychological level, the $800 level. You can see that with a substantial bull run, the S&P 500 entered into this quite long-term consolidation, but in 2013, so approximately a decade ago, we saw the breakout and the S&P 500 has been rallying ever since. I mean, just the fact that we are seeing the creation of new all-time highs as we're speaking already indicates that the path of least resistance is still towards the upside. You can see that starting back in 2009, after we saw the crazy drop caused by the financial crisis, the S&P 500 started to establish a substantial lower green support trend line. If we just connect all of the previous significant lows, you can see that always when the S&P 500 retested this trend line, we saw a major rejection away towards the upside. I mean, just a couple of months ago, in mid-2025, the S&P 500 once again retested this support trend line and created another major rejection. Back then, I published a bunch of analysis explaining all the reasons for which I do expect a move higher away from this confluence of support, because surprise, surprise, the S&P 500 was also creating a simple all-time high break and retest. Over the course of the past couple of months, the S&P 500 has already been rallying 40%. If we now duplicate this lower green support trend line and we connect all of the previous significant highs, you can see that we do get a resistance trend line, meaning that always starting back in 2009, when the S&P 500 retested this trend line, we saw a major rejection lower. But this also means, that for approximately 2 decades, the S&P 500 has been channeling higher in this rising channel formation. It's always just a matter of time until the S&P 500 will once again retest this upper red resistance trend line, meaning that from the current levels, the S&P 500 will have another approximately 20% towards the upside until it will create a new all-time high and an overall expected rejection away towards the downside. Now, don't get me wrong, a move of 40% over the past couple of months is quite substantial, but momentum more often than not actually continues. And therefore, I simply do expect the continuation towards the upside until the S&P 500 will hit this psychological $8,000 level and then create the next, at least short-term correction towards the downside. If you enjoyed today's analysis of the S&P 500, I really appreciate if you smash the like button below this video. Obviously, the moment the S&P 500 actually retests this structure, I will immediately publish a new analysis. So make sure you check back every once in a while. Now just make sure that you don't get caught up in any of this short-term volatility. Keep your long-term vision.
Yeah.